So we think one or two rate cuts by the end of the year, probably one in July, and then September or December is up for grabs. And that's really because we agree with their characterization of the economy. The consumer is the life vest, so things are still okay. But it's clear that the uncertainty is weighing on business confidence and business investment.
Would a rate cut help the U.S. economy? Would it help the global economy?
I think that's such an important point because we are fixated on what the Fed will do. But really what we should be asking ourselves is, will it matter? Will it actually help this characterization of a downshift in U.S. and global growth? And we really don't think so, because it's happening because of economic policy uncertainty, not because of tight monetary policy. So we really don't think it changes the picture.
Then why do it?
I think as Draghi has said as well, it's like, well, we have to do something. We have to try to help. We can't just throw our hands up in the air and give up. But is it really going to help? Not so much. Maybe it puts a floor on growth, it puts a floor on the market, but there is no big acceleration here coming.
Evan, what do you think?
Yeah, I mean, I think we've seen a full shift from the Fed to risk management mode, where in the average ahead of every recession, the Fed has been about 5%. They've got 2.5% of ammo, and the argument is, let's act really early to make sure that we're ahead of this. And because the worst thing that happens is you cut 250 basis points, you're back to zero, and everyone thinks you're behind the curve. So insurance, it does make some sense, and it makes some sense in light of the data we're seeing today, the softer consumer confidence and home sales.
But how much of a slowdown or a downturn are you actually predicting?
So our view is on the economy is bend, don't break. It's that we're undergoing a mid-cycle slowdown, same as we did 2011, 2012, 2014, 2015. Ultimately, as Gabriela mentions, it's the consumer, it's the labor market that is what will make us hang tight. But we have to watch that data really closely.
But in those cases, there was never a Fed cut outright. I mean, they might have paused for a little while. They might have gone very slowly here and there. They were probably still doing quantitative easing the first time around. What makes this episode worthy of a bigger response?
So I think it's what they're saying to us is that risk management point. It's that they really want to act fast and aggressively to kind of get the economy, making sure that it's stabilized and support the market. So, we don't think that they are restrictive right now, but providing a little bit more accommodation is not necessarily a bad thing with inflation low.
Do either of you expect a recession in the U.S. between now and the end of next year, not this year?
We usually say there has to be a reason for that. Usually it's monetary policy that's too tight. That seems to be off the table. Otherwise, it's some sort of shock that occurs. Now, of course, it's by definition hard to see that shock on the horizon. We do think this trade issue could potentially become a shock if we see further escalation in tariffs.
And you don't expect there to be a breakthrough this week at the G20?
No, and I think the best that we can expect and what the market is expecting is just a truce. Let's just keep talking and let's postpone further tariffs.
Yep.
And then that cloud of uncertainty hangs over us, but there's no downpour that drags us lower.
So it's the same question to you. Recession by the end of next year, trade solution coming, or postponement more likely?
So immediately, no trade resolution coming. We hear the White House already out today lowering expectations, right? The best we can really hope for is talks continuing, and that uncertainty will be with us. The key is we don't get escalation. If we get escalation, the risks of recession spike dramatically. Without escalation from here, we think about a 1 in 4 chance over the next 12 months or so. But if the Fed is acting the way it is, then that lowers that probability of recession.